Well, the first half of 2017 delivered the strongest half-year performance by a stock since the 2009 rebound that followed the financial crisis in the United States and in other parts of the world. But for South African investors, offshore returns were stunted by a stronger rand and largely subdued by the JSE. South African-focused companies under the cosh and continue to be so. So what should be in your portfolio for the second half of 2017? This is the Moneymakers. I'm Bruce Whitfield. I'm joined by Chris Gilmour, who's an independent investment analyst, and Govender, who is a portfolio manager at Rand Swiss. Chris Gilmour, let's start with you. I mean, if we look at 2017 as the year has unfolded, rand hedgers haven't had much of a chance, and domestically focused companies haven't had much of a chance, and the JSE kind of went within a percentage point of record territory, around 55,000, and then has gone back to its comfort zone of 51, 52, 53,000 on the index, which is an indicator of very little other than overall sentiment.
Yes. And if you take it a little bit further back, Bruce, in fact, we've gone pretty much nowhere for the past 3 years.
Yeah.
We've been going nowhere slowly. And it's really all down to the rand. So if you go back to the end of March, when the president did his cabinet reshuffle, I think a lot of us in the investment community thought that's it, it's the end of the world. Bang, the rand's going to tank, it's going to be really bad news. Although, funnily enough, given the composition of our market, it could have been very good for the market. But that's not what happened. The South African rand got caught up in this relative euphoria about emerging markets generally, and that's continued to be the essence of it. So I think it's the currency that has been responsible for our market not really doing very, very much this year.
No. Hold on a second. I would say it's our dodgy politics that's been responsible for not doing anything else.
Fair comment. But what I'm saying is the rand has reacted perhaps differently, in fact a lot differently, to what happened 18 months ago when you had Nenegate. And that is because emerging markets have come back into the fore, and they're flavour of the month. I don't think that's going to persist for too much longer.
Okay, well, that's a good precursor to where I suspect you're going to go. Viv, we're actually down probably 20% in real terms. If you had 100 rand invested in the JSE 3 years ago when it hit 55,000 on the all-share index or whatever it was, you've pulled back to 52,500 on the all-share index. Plus you've lost 6% to inflation for each of the last 3 years. Your 100 rand of 3 years ago is worth 80 rand in real terms. If you'd invested in the top 40 index, the Satrix 40, for example, you'd be a poorer person today as a result.
Almost certainly. And we've been advising clients to take the vast majority of their free money out of the country, and for a while now. The reason being is that even without the kind of downturn in South Africa, quite frankly, the exposure that South Africans have to the South African economy and the South African market is far too high, especially considering just how easy it is to get money out of the country at the moment. Exchange controls have gone, incredibly loose. I mean, 11 million rand per person. A couple could take off 22 million rands per year. And
I'm so relieved at that. That's a relief. I'll make a note.
I know 11 million was too little for you, but 22 makes a big difference for you, right?
No, it does. Is there any reason, Chris Gilmour, for you to advise people to keep money in South Africa right now?
At this point in time, and probably for the next few years, no, is the short answer. And you mentioned that in the past few months, and when I was in a previous life, we were saying to clients, look, get away from anything that relies purely on South African income, because the politics are really not looking very, very good. We're now in recession. We've had a downgrade on our sovereign debt, and the likelihood is, in my humble opinion, that we're going to get another downgrade relatively shortly on our local debt, and that's going to result in a big outflow of foreign funds.
Well, then suddenly all bets are off in terms of the bond indices of which we're part, and suddenly there's no obligation for these index investors to invest in the rand as part of this basket of emerging market currencies. And then we see the rand going from 12, 13 to 16, 17 potentially.
It's potential, yes, quite right.
Okay, so get money out and get it out quick. It's almost then perpetuating the problem of the lack of confidence in South Africa, Govender.
Yeah, look, I mean, people talk about the fact that the private sector needs to step up and help their country grow. The private sector doesn't work like that. They work on a reactive basis. They don't basically drive economic growth. They work in where things are fertile, and they grow where things are fertile in terms of economic conditions. South Africa isn't. Makes South Africa more fertile for growth, and the private sector will flood in because there's opportunity here.
Okay, but let me put it to you this way. I'm going to pick a bank, random bank. Let's say ABSA, for example, formerly known as Barclays Africa, on a dividend yield of like 7%.
Yeah.
Now, hold on a second, but at some point South Africa Inc. is worth buying.
Yes.
It's just not now.
Yes. If you take it for the very long term, and look, ABSA has streamlined very nicely over the past few years, and they do have operations in the rest of Africa, ex-Barclays, that I dare say in the longer term will do very nicely for them. But I think for the next few years, it might not be that wonderful because of the economy really is not going to perform, in my opinion.
Okay, let's say, for example, we've got $25,000 at our disposal. The Theresa May's money tree bore fruit for us for some reason, and we've got $25,000. That's enough to take offshore? I mean, yes. I think that's the sort of minimum amount that investors have got to be seriously considering, 300,000 Rand or thereabouts. What does one buy that is going to give a better return in terms of capital growth in dollar terms, and give us the hedge against what both of you anticipate is going to be a depreciating currency? Govender, you go first.
I would be the indices, number one. The offshore indices are incredibly cheap compared to local. For instance, an offshore US ETF for instance, S&P 500 is 1/17th the cost in terms of fees for a local ETF.
Fees, but in terms of the multiple, the S&P 500's had a rollicking year.
Yes, but you can buy other emerging markets. You can buy global indices. There's a world out there. South Africa is not special.
I need you to be more specific. I need you to tell me 2 indices that I should be looking at as to consider for this fictional $25,000.
If I had to choose, I'd say the MSCI Global or the MSCI Emerging Markets, number one. And I would actually still go for the S&P 500. I just still think that there's still opportunities. It's better to be in the US than to be in Europe right now. Even though Europe is coming back, I still think there's such structural fractions in that economy, in that region, let me say, that I would be nervous about it. You just saw that bailout in Italy about those banks. You saw the kind of pushback for the Germans saying it's legal, but it's regrettable. I still think there's a lot of weakness in the European sector that I'm worried about going forward.
Okay, that's nice and safe. So look at the MSCI Global Index,
or emerging markets,
or emerging markets, or S&P 500. But I need a wild card from you, which I'll come back to you on in a moment. Chris Gilmour?
Let me give you a wild card. Back in May, when I was at the CFA conference in Philadelphia, I went to interview a company called Aramark. ARMK is the code. Now the story was published yesterday in MoneyWeb Investor, so you can see it. It's free for you to have a look. Great company. It's the perfect foil to the FANGs. The Facebook, Amazon, Netflix, Google. It's America's BidCorp. Food services, facilities, uniforms. It's risen 15% this year. Wonderful company. Came out of private equity, going very, very nicely indeed. So it's companies like that are doing well in America and will probably continue to do well in America, even if you have a stock market crash. Because it's not a particularly elevated. We're looking at about 15, 16 PE, which is high, but it's not ridiculously high. But it's generating what I would call annuity income.
All right.
So there's a nice little wild card.
I mean, and again, for those who don't want to take their $25,000 and put it all into Aramark.
No, sure.
Yes. A bit of diversification, how would you
Absolutely.
get that?
I'd hold a bit of cash offshore. I wouldn't be going hell for leather into stocks in their entirety. So something more approximating a balanced fund type of approach. Wouldn't necessarily be going into bonds, because I do think bond rates are going to be rising around the world for quite some time to come. So I would tend to concur with Viv here, get a nice broad approach to something like DBX World, for example, or the S&P co-shares equivalent. There's plenty of them.
So DBX World, now that's Magda Wierzicka's just bought the DBX portfolio. Yes. It's cheap to invest in. Yeah. Is there a cheaper way of doing it than DBX, Viv?
Yeah, the Vanguard options, the international options are significantly cheaper. Comparison, DBX, what's called the US tracker, US DBX, is one of the more expensive ones, but it costs about 0.85% per year in terms of the internal fees in that thing. The Vanguard costs 0.05, 1/17th.
What is the difference in performance?
Same exact thing.
So why would you go for that?
Because it's offshore. If you go offshore, you can, like I said, you take your money out of the country. Firstly, you use your balance that's available to you right now, the million plus another 10 million investment amount, so 11 million per person per year. You can go offshore, open a stockbroking account offshore, and buy these things. There's even facilities for places like, for instance, can I mention names?
Yeah.
Okay. Like Sunlam Glacier has a great little thing in via Bermuda, an endowment. It taxes everything like it's in South Africa, but at a 12% capital gains rate. All your money is available, almost 90% is available within the 5-year period.
The point is, there are already interesting options for South African investors. For $25,000 is a lot of money. It's less today than it might be in 6 months' time in real money. But there are lots of options, and one's got to really do one's homework to make sure that you don't go and buy a more expensive option when there's a cheaper one available to you.
Yes.
Wild card.
My wild card right now is I'd go for Amazon. I do think
one of the fangs.
One of the fangs. But here's the thing. I mean, we don't know. We don't realize how fast driverless cars are coming into play in the world. And as they come into play, Amazon's going to benefit from it dramatically because it makes delivery costless almost. Imagine the cost of driving a car to your house. Most of it goes towards the driver. Okay, take out the driver, make it driverless. The delivery cost becomes petrol and capital costs, which are going to be almost nothing. So you can deliver your groceries to your house for less than 10 rands. Why deliver it once a week and deliver it once a day? Those things really play into Amazon's key demographic. And I do think a company like Amazon and some of the other online retailers are really going to be huge beneficiaries of the driverless vehicle going forward.
Okay, so Amazon.com, driverless vehicles. I see where you're going with that one. Chris Gilmour, you're smiling as if it's a no-brainer.
Yeah.
I don't know if this is not 10 years away. I mean, one of the great problems with investing is timing. So often in these things.
Ford has promised to do a driverless vehicle service by I think 2021.
Okay,
that's 4 years away. That's not that far away. The world moves very fast nowadays.
It does.
It does.
And we were discussing this offline before we came in here, Bruce, and we saw the announcement by Volvo that by 2019 there will be no more internal combustion
No
cars.
more platinum.
Yes, precisely. You certainly don't want to be in platinum.
No.
Okay.
Sure.
But driverless cars.
Has anybody told the minerals minister? He's condemning a generation of investors
of electric cars. I think. I mean, you can do it, I guess, on a internal combustion basis, but electrics make it that much more straightforward. So I think it's happening an awful lot faster than we appreciate. We don't see it here in South Africa because we're a bit of a backwater. Let's be very honest about it. But if you go to the States, you go to Europe, you go to the UK. You see places where you plug your car in to charge it up in the strangest of places. And driverless cars make an awful lot of sense. They really, really do. Cutting down accidents, decreasing congestion. I mean, you name it.
Taking away ownership. I've got a car parked downstairs. It's going to be there for 23 hours out of the day. What is the point?
Exactly.
Thank you, gentlemen, very much indeed. Chris Gilmour, the independent investment analyst, with some interesting views on offshore opportunities, and Govender with his Amazon pick. He and Warren Buffett, much of a muchness. They both missed the opportunity years ago, and now sorry about it. Govender is a portfolio manager at Rand Smith. The markets continue to ebb and flow, but some say it's always a good time to make investments. It's just where, when, and how big you can afford to go. Till next time, bye-bye.